the China side, the NPC has been talking about 5% growth. That is a tall order on the back that in 2023 we already did 5.2 already, and that this year we got a high base. That is aggressive. That does not mean that that's not doable. So I think the expectation is that going forward we should expect more government policy support for addressing the overcapacity situation in some of the sectors. At the same time, we haven't heard a lot in terms of policy how to stimulate demand. I think that is something which I think investors should be look forward to. So I think and then obviously how the Chinese government is going to stabilize the housing market is going to be something which I think investors also want to pay attention to. Net, if there's any policy support, that is nice to have, as a base case. Now, obviously, our job is to find companies that can have a self-help program to help them to navigate, in a very difficult situation in China right now. And also we also like companies that have a good exposure to overseas market, where the margin is better, the earnings profile is higher than the domestic market. Now, I think over the last 6 weeks or so, what we also learned from the policymaker in China is that the national team is putting their efforts together in supporting the ETF, and also the government has also been kind of like enhancing the SOE to do more buybacks, to do more dividend. So I think that is very positive for shareholder as a whole. Now, in our recognition, this is helped to put a floor into the market. And so hopefully, given the fact that the fund flow is coming through, people in general have been most underweight China in general, and that should give us some relief, and at least for the next 2 quarters.